What's up, crypto crew? Bitcoin Bulletin is live and the market is absolutely electric today. Get ready, because we're diving headfirst into the most explosive updates shaping the future of digital assets. The pace is relentless, the news is critical, and if you're not plugged in right now, you're missing out on the moves that matter. We've got a packed show with insights that could change your game. Are you ready for the rundown? Let's go. First up, we're talking about the giants. Bitcoin, Ethereum, and XRP are holding their ground, but is this the calm before the storm? History points to a notoriously tricky month ahead, and the charts are telling a story of consolidation and potential shifts. We'll break down the technicals, the sentiment, and what it all means for your portfolio. You don't want to miss this deep dive into the forces at play. Then, we're shifting gears to a massive financial flow. The US is leading the charge with billions in crypto inflows, and it's not just Bitcoin getting the spotlight. We're seeing Ethereum absolutely outshine its biggest rival in August. What's driving this trend, and what does it signal for the broader market's power dynamics? We've got the numbers and the analysis you need. Next, we're zooming out to the big picture of market dominance and emerging challengers. Bitcoin is holding a massive share, but new players are making serious moves. We'll look at the evolving power struggle, the upgrades that are pushing platforms forward, and which coins are positioning themselves for the next wave of adoption. Get ready for a strategic overview of who's winning and why. And finally, we're getting granular, looking at the very holders who could dictate Bitcoin's next move. Short-term holders, their cost basis, and how their actions near key levels could send ripples across the entire market. We'll analyze the on-chain data that matters and what it means for the immediate future of Bitcoin. This is crucial intel. Stick around because you need to know this. Don't forget to smash that like button, subscribe if you haven't already, and ring that notification bell so you never miss an update. Let's get into it. September's shadow looms. Bitcoin, Ethereum, XRP brace for impact. As the calendar flips to September, the cryptocurrency market finds itself in a state of watchful waiting. While Bitcoin, Ethereum, and XRP are currently maintaining their positions, historical data paints a potentially challenging picture for the month ahead, often dubbed Red September due to its tendency for price declines. Market sentiment has taken a noticeable downturn, with the crypto fear and greed index dropping significantly from a high of 75 to 46, signaling a move into the fear zone for the first time since mid-June. This shift is particularly relevant as September has historically been a difficult month for Bitcoin, which has seen an average price drop of 3.77% each year since 2013. This seasonal weakness is a primary concern for many traders and investors. The broader macroeconomic landscape adds another layer of complexity. All eyes are on the Federal Reserve's upcoming policy meeting on September 16-17. Markets are pricing in a high probability of a 0.25% interest rate cut, creating a dichotomy for the crypto market. The potential for seasonal downturns versus the possibility of relief from monetary policy adjustments. Traditional markets are also showing mixed signals, with S&P 500 futures suggesting a positive open after recent volatility, even as inflation remains above the Fed's target. In this dynamic environment, Bitcoin is demonstrating resilience. The flagship cryptocurrency has seen a modest gain of 0.53%, trading around $108,842 and showing strength around the psychologically important $108,000 level. Technical indicators, however, suggest a period of consolidation. The average directional index, ADX, at 20 indicates a lack of a strong trend, suggesting that range trading strategies might be more effective than trend-following approaches in the current choppy market. The Relative Strength Index, RSI, at 40 points towards the Red September effect, as traders are showing a tendency to sell, pushing the indicator closer to oversold territory. The squeeze momentum indicator is off, suggesting that recent volatility has already been released, and there's a bearish movement with selling pressure dominating despite the slight recovery. While the exponential moving averages, EMAs, show a bullish configuration, 50-day EMA above 200-day EMA, the narrowing gap between them could signal a deceleration of the bullish trend, potentially leading to a death cross. Prediction markets reflect this cautious sentiment, with traders giving Bitcoin a 75% chance of dropping to $105,000. Ethereum, while underperforming slightly with a 0.66% decline to $4,363, shows a more bullish technical picture. Its ADX at 28 crosses the crucial 25 threshold, indicating a trend is establishing, though a recent drop in ADX could signal a weakening trend. The squeeze momentum indicator suggests volatility is building, potentially preceding a breakout. The RSI at 57 is in bullish territory, indicating a calming market. The bullish EMA alignment provides structural support, but the failure to hold above $4,400 is a concern. Prediction markets remain optimistic for ETH, with a 77% chance of hitting $5,000 by year-end. XRP is showing relative weakness, down 0.5% to $2.76. Its ADX at 19 is the weakest, indicating a range-bound market with no clear direction. The squeeze momentum being on, combined with the weak ADX, creates a coiled spring scenario, suggesting potential for a breakout. However, XRP has broken below its 50-day EMA, indicating short-term bearish control, and its RSI at 40 suggests it's heading towards oversold territory. Prediction markets anticipate a drop to $2.50 before reaching $4. But what does this mixed market sentiment mean for the flow of capital? We're about to find out. We're heading into a story about where the big money is flowing, and the US is making a massive statement. US drives $2.48 billion crypto inflow as Ethereum steals the August spotlight. The cryptocurrency market experienced a significant financial influx in August, with the United States leading the charge with a staggering $2.48 billion in digital asset inflows. Notably, Ethereum emerged as the star performer, attracting $3.95 billion in inflows and substantially outshining Bitcoin, which saw considerable outflows during the same period. This trend highlights a shifting investor preference and growing confidence in Ethereum's ecosystem. This surge in Ethereum's popularity can be attributed to several factors, including the ongoing development and adoption of decentralized finance, DeFi applications built on its network, as well as anticipation surrounding upcoming network upgrades. While the exact reasons for Bitcoin's outflows are multifaceted, they could stem from profit-taking after recent price appreciation, a rotation of capital into altcoins perceived to have higher growth potential, or broader market sentiment shifts influenced by macroeconomic factors. The data suggests a growing appetite for assets beyond Bitcoin, particularly those offering utility in emerging sectors like DeFi and Web3. The inflows data, often tracked through investment products like Bitcoin and Ethereum trusts and exchange-traded funds, ETFs, provides a crucial barometer of institutional and retail investor interest. A net inflow of $2.48 billion into the crypto market, predominantly driven by US-based investors, indicates a strong underlying demand for digital assets. The fact that Ethereum's inflows dwarfed Bitcoin's is a significant development, potentially signaling a maturing market where investors are diversifying their holdings and seeking opportunities beyond the dominant cryptocurrency. Ethereum's dominance in August's inflows is particularly noteworthy, with $3.95 billion flowing into Ethereum-related investment products. It underscores the network's critical role in the DeFi space. As the foundational layer for a vast array of decentralized applications, from lending and borrowing protocols to non-fungible tokens, NFTs, Ethereum continues to attract developers and users alike. The ongoing development, including the successful implementation of upgrades aimed at improving scalability and reducing transaction fees, further bolsters investor confidence. Analysts suggest that this trend could continue as more real-world assets are tokenized and integrated into the Ethereum ecosystem. Conversely, Bitcoin, despite its status as the premier digital asset, experienced outflows in August. While outflows can be a normal part of market cycles, a significant outflow during a period of overall market growth warrants attention. It might suggest that some investors are rebalancing their portfolios, taking profits, or shifting capital towards assets they believe offer a higher risk-reward profile in the current market environment. However, Bitcoin's fundamental strength and its role as a store of value remain robust, and these outflows may represent a short-term market adjustment rather than a long-term trend. The overall inflow of $2.48 billion signifies robust investor confidence in the digital asset class, despite the divergence in performance between Bitcoin and Ethereum in August. This inflow data, coupled with Ethereum's strong performance, suggests a healthy diversification trend within the crypto market. As institutional adoption continues to grow and regulatory clarity improves, such capital flows will be critical indicators of market health and future growth trajectories. The data underscores the increasing sophistication of crypto investors who are actively seeking opportunities across different segments of the digital asset landscape. This shift in capital flow is a major signal, but what's really driving the underlying market structure? We're about to unpack the dominance of Bitcoin and the rise of new contenders in the evolving crypto power struggle. Bitcoin's reign continues. Dominance holds firm amidst Solana surge and market power shifts. In the dynamic landscape of 2025, Bitcoin, BTC, continues to assert its dominance, capturing an impressive 63% of the total cryptocurrency market capitalization. With its price hovering around $108,144.53 and a market cap nearing $1 trillion, Bitcoin's position is significantly bolstered by increasing institutional adoption and a more stable global macroeconomic environment. This sustained dominance highlights its established role as a primary store of value and a benchmark asset within the digital currency space. Ethereum, ETH, valued at $4,388.60, remains a cornerstone of the decentralized finance, DeFi ecosystem. Its importance is amplified by the recent PECTRA upgrade, which has enhanced its scalability and network efficiency. Ethereum continues to be the preferred platform for smart contracts and Web3 applications, attracting significant developer activity and investment. Its robust ecosystem and ongoing technological advancements solidify its position as the leading smart contract platform, crucial for the growth of decentralized technologies. However, the market is witnessing the rise of formidable competitors. Solana, SOL, priced at $201.12 with a market cap of $108.8 billion, is rapidly gaining traction. Its high-speed transaction processing capabilities and low transaction costs present a compelling alternative to Ethereum, attracting a growing number of developers and DeFi platforms. Analysts are optimistic about Solana's future, with some projecting potential price targets of $500 or higher, driven by its technological advantages and increasing adoption. Regulatory clarity from the U.S. Securities and Exchange Commission, SEC, has also boosted investor confidence in Solana. Beyond the top two, other cryptocurrencies are carving out significant niches. Chainlink Link, at $23.39, plays a critical role in connecting smart contracts with real-world data through its decentralized Oracle infrastructure. Its relevance is further amplified by the growing trend of tokenizing real-world assets, RWAs, for which Chainlink provides secure and accurate data feeds. Projections suggest significant price appreciation for Link, with targets reaching $38 by the end of 2025 and $80 by 2030. XRP, the native token of the XRP ledger, is experiencing renewed institutional interest following the resolution of its legal dispute with the SEC. Trading at $2.78 with a market cap of $165.3 billion, XRP is increasingly recognized for its utility in cross-border payments. With regulatory uncertainty largely dispelled, XRP is considered an undervalued asset with substantial potential for price appreciation, supported by growing adoption among financial institutions. Cardano, ADA, priced at 81 cents with a market cap of $29 billion, continues to focus on scalability and research-driven development. Its ongoing network upgrades, such as the Hydra upgrade, aim to enhance its capabilities and compete with other major smart contract platforms. With several ADA-based ETF applications pending SEC review, Cardano is well-positioned to benefit from increased institutional interest and broader market adoption. Collectively, these developments showcase a diverse and evolving cryptocurrency market in 2025. While Bitcoin maintains its leading position, the growth and innovation demonstrated by Ethereum, Solana, Chainlink, XRP, and Cardano highlight the increasing maturity and specialization within the digital asset space. Investors are increasingly drawn to projects with clear use cases, strong technological foundations, and positive regulatory outlooks, indicating a sophisticated market that balances potential growth with fundamental value. Understanding these market dynamics is key, but what happens when the price itself is dictated by the behavior of specific investor groups? We're diving into the on-chain data that could determine Bitcoin's next major move. Short-term holders at a crossroads, will they dictate Bitcoin's next price move? Bitcoin's price trajectory is currently under scrutiny, with a particular focus on the behavior of short-term holders, SDHs, and their realized cost basis, which has approached a critical level around $107,000. This figure represents the average price at which investors who have held their Bitcoin for less than 155 days acquired their assets. Historically, this SDH cost basis has served as a significant psychological support and resistance level, influencing market sentiment and price action. Analysts such as Axel Adler Jr. from CryptoQuant emphasize the pivotal role of the SDH realized price. In bullish market conditions, SDHs often view price dips towards this level as attractive buying opportunities, reinforcing it as a support zone. Conversely, during bearish phases, SDHs are more inclined to sell to cut losses, transforming the level into a potential resistance. Bitcoin's current proximity to this threshold, coupled with its position near the 200-day simple moving average, SMA, at approximately $100,700, creates a crucial inflection point that could significantly impact its future price movements. Recent price action has seen Bitcoin dip to around $108,800 before experiencing a slight rebound to $109,800. This fluctuation underscores the delicate balance of market forces and the potential for volatility. Should Bitcoin's price decisively break below the $107,000 SDH cost basis, it could trigger a cascade of selling pressure from SDHs, potentially leading to a more pronounced downward correction. The market is keenly observing whether this level will hold as support or if further price erosion will occur. The aggregate behavior of SDHs at this critical juncture is a key indicator of broader market sentiment. If these holders opt to accumulate more Bitcoin during the current pullback, it would signal increasing confidence in the asset's long-term value and could provide a solid foundation for a sustained uptrend. On the other hand, a wave of selling activity from SDHs would suggest a shift towards bearish sentiment, potentially prolonging the current correction phase or initiating a steeper decline. These dynamics are not unusual in the crypto market and often reflect the underlying psychology of market participants reacting to price levels and perceived risk. The interplay between the SDH cost basis and the 200-day SMA creates a zone of significant technical importance. A retest of this combined area could be a decisive moment for Bitcoin. The market's reaction to this test will provide valuable insights into whether the current trend will resume, reverse, or enter a prolonged period of consolidation. Understanding these on-chain metrics and their historical significance is paramount for traders and investors seeking to navigate Bitcoin's volatile price landscape. So, we've covered the technicals, the inflows, the market structure, and holder behavior. What's the takeaway? It's time for a rapid-fire recap of today's biggest stories and your call to action. All right, that's a wrap on today's explosive Bitcoin bulletin. We saw Bitcoin, Ethereum, and XRP holding steady amidst red September forecasts. Then, the US led massive crypto inflows, with Ethereum outshining Bitcoin in August. We also broke down Bitcoin's market dominance, Solana's surge, and the evolving power plays, plus how short-term holders could shape Bitcoin's next move. Stay informed, stay ahead. If you found this valuable, smash that like button, subscribe for more critical updates, hit the notification bell so you never miss a beat, and drop a comment with your thoughts. Follow us on all social platforms for real-time insights. We'll see you on the next one.